What is going on? Welcome back to Trending Stocks. Today I want to talk to you about SoFi. I want to go over some of the data points, what shorts are doing, what's influencing the stock price today, but more specifically, what some analysts are doing for this upcoming earnings already. Before I get into any of that, make sure you guys hit that thumbs up and subscribe. I always greatly appreciate that. And with that, let's get right to it. So currently it is down 0.81%. So in comparison to a lot of other growth stocks and fintechs, it's not doing too bad. Obviously, there was that dip first thing to $7.77 because there's been a lot of fear today associated to the whole conflict with Israel. So that is plaguing the market right now because people just generally don't know what the next repercussions might be or how big this could potentially get as well. But as far as volume, 6.7 million shares being traded, 22 is the average. So generally, it looks like institutions aren't really doing too much. These are some of the transactions that did occur on the secondary market over $100,000. Only one for today, and it was about $1.26 million overall for premiums. And based on the bid and the ask and the selling price, it was a sell. So that's obviously what kickstarted the downtrend a little bit. But over and above that, though, they recently did announce their earnings. So it is going to be on October the 30th, 2023, early morning, once again at 8 a.m. Eastern. But it's more specifically what some analysts have done recently to kind of change their estimates. And what I mean by that is when it comes to earnings, there's several different things investors care about: earnings per share, revenue, and future guidance. Especially future guidance for banks right now. People want to know, like, what are you doing to mitigate risk? And even though SoFi has done a phenomenal job, in my opinion, of doing that, people will still want to hear, like, we're trying to cut costs and blah, 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 especially based on the news that as well came out on October the 5th about Galileo expanding the buy now, pay later kind of aspect that could be perceived as potentially adding additional risk. So most likely analysts are going to talk on that to some regard, at least my own opinion, not a financial advisor, of course. But when it comes down to earnings per share, currently there is around 16 analysts that have given estimates with a consensus of -7 cents per share. Previously it was 7, so it does look like one analyst removed their estimate, which is kind of weird, but it doesn't really change the actual number too much or the consensus. As far as revenue though, there was 13 and still is 13 analysts that have given an estimate, but it did look like one analyst recently upped their rating. So it was 512.83 million versus now it is 513.54 million for Q3 revenue. So that's a fairly good thing, a little bit more optimism as far as that. But generally, this is what you want to take a step back and realize that, look at this growth. Like, you don't get this too often with a lot of companies. Sometimes you get like volatility, like anticipation that there's going to be a pullback as far as revenue, but this is nice constant growth. This is exactly what you want to look for in a company. But I could be wrong. Let me know your thoughts on that in the comments below. But as far as some data points, let's talk on options. So the market has been open around 2.5 hours, give or take. There's right now $1.1 million in calls being purchased versus 327,000 in puts. So based on this information, people are anticipating for it to trend up, and maybe that this whole sell-off today is an overreaction potentially. And even if you take a zoom out viewpoint on this and look over the last 7 days, roughly around 25 million in calls being purchased versus 12 million in puts. So fairly optimistic stuff. When it comes down to this though, specifics, so this shows all the call options, the open interest, the strike prices, expiry dates based on this upcoming Friday. So for October the 13th, it is anticipated to be roughly between the 850 and 950 range. So kind of good in that regard. As far as puts though, it is anticipated to be most likely sub $7. So you kind of have both extremes as far as that. But as far as what the technicals are saying, so with it now at $7.96, so it is recovering fairly nicely. But with it at $7.96, it is between this P and this R1. So $7.76 is going to be that next strong support. And coincidentally, that's actually what it did bounce off of. So $7.77. So obviously that's a good sign. Vice versa, $8.15 is going to be that next strong resistance. So I do feel with SoFi and their earnings right around the corner, you are going to have a little bit more of a value rally essentially, or FOMO kicking in. And even if you look back at the previous history, when it comes down to any previous earnings, there was always a run right up until the earnings. Earnings come out, usually they're always a very, very good home run, but unfortunately, what does follow after their earnings is a sell-off. So I don't know if that is maybe what is driving it up today versus the other fintechs. I'm not sure, but definitely that is something that does constantly happen. As far as momentum shows, number of retail investors are slowly getting in, so they're buying the dip today. Stochastic is nice and bullish, and it is neutral at 42, so it's not oversold, not overbought. It's kind of nice set in the middle. So I do feel that this is potentially a little bit more of an overreaction, especially to SoFi, because I don't really feel that there could be that many repercussions unless there's a massive World War III that does follow this or kind of is kickstarted because of this. But I don't think that there's that many repercussions that could affect SoFi exactly. But once again, I could be wrong. Maybe there's some other aspects I'm not really familiar with. So if there is some repercussions that you are aware of, let me know in the comments below. But as far as what shorts are doing, they're not really doing anything at all today. 12.43% of the free float is being shorted. 104.83 million shares overall are being shorted. And just looking through here, Interactive Broker short availability, there is around more than 10 million shares available. So if shorts wanted to double down and suppress SoFi, they very much could, but I feel like they're not because they feel like this is an overreaction. But once again, I could be wrong. Let me know your thoughts on all of this in the comments below. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And also on a side note, I always like to say this, I only bring up short information only because it's a good benchmark, a good tool to use, not here to say it's going to be a squeeze. So don't get me wrong about that. So once again, I appreciate all of you watching. If you do like my channel, want to support the growth, take a look at my memberships, link in the description below and also the comments. But with all that said, I appreciate all of you watching, and let's eventually make a ton of money on SoFi.